The SIBO put to call ratio is starting to skyrocket a bit. So in today's video, we're going to take a look at what happens when this number gets a bit higher. We're going to take a look at what the implications are for the SPY, the NASDAQ, the S&P 500, right? The Russell 2000, the VIX, the dollar, the bonds. And of course, if you guys enjoyed today's video and enjoy the content, please make sure to like, comment, subscribe, do all that good stuff. Let's get started with the video. All right, so this should be pretty fun. So basically what we're looking at is the equity put to call ratio. And when the put to call ratio starts to break upwards like this, it means that the market needs to pull back. So the level that I'm specifically like watching is above 1. If this gets above 1, as we can see, it's very sharply increasing, right? But as it gets above 1, essentially what ends up happening is that those are the times in the market when we get like pretty guaranteed pullbacks. So they usually happen for 2 days. So what we can do is just look at multiple instances in history here of when the put to call ratio hit above 1. All right, so the first one we can do is May 9th and March 9th and March 10th. So we can take a look at that. All right, so here's the chart of the S&P 500, and this is March 9th, this candle right here, and then this candle right here is March 10th. So we can clearly see that as the put to call ratio began to spike, we got a solid move to the downside. All right, so that was one instance. You might be saying, all right, Hamid, that was just one case, you know, that you need to look at some more information. So, okay, cool. Let's take a look at February 28th and March 1st. Even though we didn't hit above 1, it only got to 0.97. What we're going to see is it still worked out. So February 28th and March 1st. All right, so here's the chart of February 28th and of March 1st, right? So what we're looking at, what I'm basically doing is how far and how close after once we hit that level does it justify that we're going to get a pullback? Like, are we going to get a pullback one of the days after this ends up happening? That's what I'm basically looking for. So in the first instance, we saw that that was the case. Now for this February 28th, and February 28th was right here. March 1st was right here. And still the next day we ended up falling even lower. So basically what I'm doing right now is seeing if we end up falling lower after it gets above 1. And even though we didn't get above 1, 0.97, we still ended up falling lower the next day. All right, Hamid, that was a really terrible example. You're really stretching it. You're just trying to prove your point. It doesn't really make sense what you're saying. All right, cool. Let's look at, again, January 17th and January 18th, where we spiked up above 1. We got to 1.3. All right, January 17th and January 18th. Okay, so here is a chart of January, right? So this is January 17th right here. This is January 18th right here. And you can clearly see we ended up falling pretty dramatically from 398 down to 387 after we broke above 1. All right, so as we can see, this is a pretty decent indicator. We're just going to be watching to see if we can get a break above 1. We're starting to get close, so we're just going to have to monitor what ends up happening tomorrow for this as well. So in general, the market was skyrocketing today because of tech stocks. So we see that the NASDAQ didn't break above these highs, but multiple tech stocks did. So for example, Apple broke above its recent highs and broke above 180. We can see that Tesla broke above its recent highs and made another high. We see that Facebook, Meta, broke above its highs, made another high as well. So multiple on Netflix also broke above and was showing some strength. So multiple large tech stocks were showing a lot of strength today, and they helped pull the market up and they held the NASDAQ up. The other stocks that were the leaders, which was the AI sector, so Nvidia, take a look at these stocks. They're not breaking above their highs, they're just holding support. So Nvidia, AMD, Microsoft held support, right, and bounced, and Google held support and bounced. So these stocks that were the winners, we just maintained support and we're bouncing a bit. But the laggers, the losers, which were the Apples, Teslas, etc., they weren't the AI stocks and the chips. these were the ones that ended up getting some more love. So it's a rotation into tech, and more specifically in tech, it's coming out of the AI stocks more so into the larger tech stocks that aren't a part of AI. So that's what we're basically seeing here. The only other level of resistance here for the NASDAQ is going to be 356, 357 area. So yeah, and then on top of that, we have a gap to fill down here from back in April of 2022 at 359.93. So above 355, 356, there's a gap to fill at 359.93 on the NASDAQ. So we just have to see if it just keeps skyrocketing here. We're clearly seeing that there's strength in the large tech stocks. We just have to see if everything continues. All right. So there's that for the NASDAQ and the tech stocks. Let's go ahead and take a look at the Russell 2000. All right. So the IWM is clearly getting a lot of love as well. It's still trading within its range. It's bouncing a bit. Still has not yet broken above 177, of course. So we just have to see how this responds. Clearly, this looks bullish. We need to see if it can continue above 176.50 and 177 are major levels of resistance for the Russell. Next, let's take a look at the dollar. So we know that the dollar has an inverse relationship to the market. If the dollar is doing well, that means that the stock market is doing poorly. We can see that the dollar was skyrocketing all throughout here, but it began to teeter at support. Yesterday, I was showing how the dollar was setting up in a very bearish manner. I was wary about the dollar. I was explaining how the dollar does not look like it would sustain itself. And I was saying if the dollar was a normal stock, I would not want to go long the dollar at that point. And what ended up happening today was we ended up falling and breaking through those levels of support, because obviously when we're trying to go long here, right? When we're trying to buy up here at a level of resistance, it's not smart. You would rather wait for things to test levels of support. So now the dollar is at a very major level of support at 103.50. But this entire 103 area is going to be very important for the dollar. We could have another down day tomorrow, but now the dollar is getting to points of support. And now it's starting to make a bit more sense to go along the dollar down here. So if the dollar ends up bouncing, which it should bounce either tomorrow or Monday, depending on how this plays out, then we need to see if there is going to be weakness in the stock market on those days. Next, let's go ahead and take a look at the VIX. So we know that the VIX also has an inverse relationship to the market. If the VIX is falling, generally, that means that the stock market is doing well. So clearly we can see big red days, big red candles on the VIX. There's still more room to go to the downside on the VIX before we get overextended. You can see that the lower level of the Bollinger Band is pointed downwards. There's still more room to go to the downside. It's not, we're not out of the woodworks yet. So if there is more room to the downside on the VIX, that means that there's more upside potential left on the stock market. And yeah, we just have to see basically now if the VIX can come back, and it needs to hold basically 15 and then 1450 on the VIX. So we're at 1550 essentially. We need to hold 15 and then 1450. And then at 1450, things are going to be around 14 to 1450. Things are going to be really overextended to the downside on the VIX. And at that point, that would be a very good opportunity to go long some volatility, in my opinion. And last but not least, let's take a look at the SPY. So we know that the SPY ended up breaking above its highs today, and we filled the gap again. Obviously, we filled that same gap from back in August to here, right? So we're trading above that gap now. So essentially, we need to see if we can come back up to these levels here at 425, 426. You know, which is again 425 is a very major psychological level, and then above that we have this 428.80 level. But with the put to call ratio getting pretty overextended, things should have more room to go. to the mid 420s, and then if it gets to 430, things can be very overextended. And then from here, just imagine it breaking above 430. The amount of people that would be bullish breaking 430, that would give the perfect storm. That would be the perfect opportunity to make people be bearish. But yeah, so we have that gap to fill at 426, that 425, 426 area. That's the next level of resistance, and then it's 428, 429 on the SPY. So we just need to see if the VIX can end up breaking. We need to see if the VIX can hold support. We need to see if the dollar can hold support, and we need to see if the large tech stocks continue to get a lot of love. Also, it's going to be very interesting to see what ends up happening for the debt ceiling news, because the debt ceiling is one of the major reasons why, in anticipation of the debt ceiling news, is one of the major reasons why I think that we're getting this bounce here. Because initially they were saying that we needed a deal by June 1st. But then Goldman Sachs says that we actually have the U.S. economy, the Treasury actually has until the 7th or the 8th until the U.S. becomes default. So it's it's gonna be interesting after the news comes out. Are we going to end up pulling back, and is the market going to drop afterward? Let's see what ends up happening. But definitely, if the put to call ratio can get a bit higher, that'd be really, really good. And we're gonna monitor that day to day now moving forward. And yeah, 425, anything above this area here starts to become pretty interesting to short. But yeah, let's see how everything turns out. But yeah, regardless, I hope you guys enjoyed today's video, and please make sure to like, comment, subscribe, and definitely I will see you guys tomorrow morning. Thank you.